Zach. What am I getting here? I'm just getting my hashtags to make a Twitter notification about the stream. There we go. I think that does it there. Okay, let me turn this music down. Hopefully you can hear me. Let's Mars. Dang, Rick, why do you always make me choose between the stream and game? You can just listen in the background, no dramas. What are you playing? What game are you playing? Ah, thanks Doge Moon. Rockets. Check out that CPI result, huh? 6%. Up from, or down from 6.4% interest rates, right? I mean, inflation rate, my bad, not interest rates. That's a different thing. Let me grab the inflation chart. Here it is. So as we know, the last CPI report was underwhelming. So it kind of, it didn't flatten, it just slowed down a bit. We were hoping for this trajectory that we've been getting, we were hoping for that to carry on, but it slowed. It only went down to 6.4 off of 6.5. So this time though, it's like we're back on pace with the rate of drop on inflation. So excellent, good to see. I think by next CPI, we'll have, which is obviously a month away. It's usually about a month. They're usually about a month apart. Yeah, we should see, hopefully, another decline. I just want to check. So we've gone from 8.2, 7.7. That was a nice drop. 8.2 to 7.7. That's a 0.9. Yeah, a 0.9% drop. Is it? Hang on a minute. No, it's not a point. No, it's a 0.5% drop. 0.5%. 8.2 to 7.7. Yeah, I think. Let me check. Yeah, 0.5%. Okay. I'm gonna open up this. Where is it? Where did I put it? Here. Forex Factory. CPI. Okay, a 9.1 down to an 8.5. Not a bad drop. That's a 0.6% drop. I'm gonna write these out. So August was a 0.6%. And then what was the September? 8.5 to 8.3 is a 0.2% drop. That. August, September, October was a Only a 0.1% drop. November wasn't bad. It was like a, yeah, 8.2 down to 7.7. That's a 0.5, isn't it? Yeah. October, November, 0.5% down off the previous report. And then what, December? What was that? Oh, yeah, okay. We went from 7.7 all the way down to 7.1. So that's a 0.6% drop for December. Beautiful drop. And then January was a 7.1 down to a 6.5. That's another 0.6% drop. And then February was very underwhelming. It was a 0.1% off the previous reading. And then now we're getting our March report, and it's a 0.4%. Yeah, 6.4 down to 6%. So at least it's picking back up again. So we've gone 0.2, 0.1, 0.5, 0.6, 0.6, 0.1, 0.4. Okay. It would have been cool to get that 0.6 again, like that same rate or amount of drop, but maybe in a future report, maybe in next month's. So this is the month of March for events. What do we have up next? We've got the FOMC funds rate decision will be coming up on the 23rd. So that's the next sort of like, I would say that's the next bigger event that's coming. But then, yeah, we've got PPI, which is today. So it's pretty much exactly 24 hours after CPI is the PPI results. So we'll see how that pulls in. Hopefully it's another positive impact, just as CPI was today. So Captain Kronos, hello all, hope you're all doing well. Yeah, you too, man. Good to see you. So yeah, PPI, and then we've got this consumer sentiment report on Saturday for me, probably Friday afternoon maybe for you guys. Yeah, FOMC funds rate statement, all that good stuff. And then we'll be sort of like winding down March. And then what will April? So that'll be Q1 done, you know? How fast has this year gone so far? Very quick. So April will be the start of Q2. And we're getting CPI on the 12th of April. So that's, you know, a month out, or a little less than a month out. And then we get do we get a Fed rate? No, we don't. April has no Fed's rate decision. They just leave it as is. We'll get FOMC meeting minutes, so we'll at least hear about what they're talking about post CPI report. So basically the following day. But yeah, that's cool. April, probably, yeah, without a funds rate. So we really hope the funds rate that's coming in at the, like for this month of March, we hope that this one comes in not too like pessimistic. Hopefully they've got some optimistic things to say about how inflation's going. I mean, for it to have a slow up in February and then now it's picked up again in March, like it's not at the same momentum down as it was, like as I was saying earlier. but at least it's heading in the right direction, and that's all that matters. That's what we want. We just don't want it coming back up, inflation. So it's another step in the right direction. It's going to take a few more reports before we can come anywhere close to our target if we maintain this kind of like performance. So if I get that to go on to two, there's the target, 2%. You can see like inflation never perfectly sits at 2%. It's always like fluctuating at or around. But yeah, you can see we are still a ways out from this 2% area. So I think interest rates are probably going to stay high until, you know, the CPI reporting it comes down and starts approaching this area. But for now, things are moving in the right direction. So Bitcoin, as we know, a few hours ago, punched through $26,000. That's a first for the year. I'm going to have to adjust my line here. This is going to have to go up to the peak right here. So we're now dealing with basically 26,400, but yeah, 26,386 according to this chart anyway, as the high so far for the year. Very nice. That basically punches us to new highs off the August high, because this was the highest point at the time. And we spent all this time below, and then only recently here did we sort of see some new highs. I think it was just very marginally higher. We zoom in on that area. Oh, what happened there? I think I lost the candles. Oh, I know what I did. I moved the candles. There we go. Okay. So, I need to zoom back in. Yeah, you can see the wicks. The wicks just got above that yellow line. So it was basically a double top that we were dealing with at the time. So I'm going to delete those squiggles and talk about the recent high that we've just achieved, because I mean, we're on the daily now. It is all just wick at the moment. We want to see it close up high. Otherwise, you know, wicks are just wicks. If we jump down to the hourly chart, you can see that there's been some performance above that August high line, that yellow line. So that's really cool. It went like quite a lot higher. It went like almost 5%, or 4.66% above that previous high. So not a bad little result there off the back of CPI. CPI has to be, well, at least in recent times, my favorite part, like a favorite event of the trading calendar, just because of the volatility that it pulls in. You know, I would say it's one of the most primary, if not the most primary, drivers of sentiment in the market at the moment. Now, I don't know how the DXY performed off the back of that CPI report. Let's have a look at that. So we'll pull up the DXY. Okay, sharp move to the downside. Oh, this is the monthly. Okay, so it's actually holding. It's holding above this blue line, which was, I believe, a previous low at one point. Yeah, okay, so it was a low here. It was a low here. It lost it, and then a resistance here. There was all this action below. We were trying to get it down to 100. The DXY didn't quite make it. But now, yeah, I mean, there's no signs of strength at this stage, at least in the short term, right? It's just on a downtrend. We've got lower highs and lower lows. Dramatically lower highs there. And lower lows. So, yeah, that's... I think if we can get the DXY to come underneath this blue line here, then that should get the party started for the markets again. I mean, it's just a piece of the puzzle, right? It's just one factor. Let's see what the S&P 500 did off the back of that CPI news. Okay, so it actually spent the day dropping before in the final hour picking back up, recovering. So I think due to this gap on open, right here, this move here filled that gap up. So the pullback was necessary, I suppose. We seem to have like back tested this trend line here, which comes from the all-time high of the S&P. Our resistance trend line. This got scary. The fact that we got back below it, you know, that was not great. But yeah, we're fighting. We're still fighting to hold ground here on the S&P 500. So what does that mean for crypto? I think if the S&P can break back above this pink line here, which is, you know, a support resistance level, like these levels here, bit of resistance here and here, but if we can crack back above there at least, and then maybe like start rallying, then maybe that's us like slowly creeping out of this bear market, because it was downtrend a lot, and then maybe we can start attacking this high. We were trying to get above. So for the moment, I think it's safe to say that the downtrend has ended on the S&P 500, because a downtrend is a series of lower highs. Lower high, lower high, lower high, equal lower highs there, but then look, higher high. That's the first higher high there. So, and we've maintained the low. So we've hit a low here, a higher low here, and then another higher low up here. So what we really need to see is the S&P 500 to get above this fella right here, this one. That high needs to get broken. And then, like, you know, in the more macro, the more micro view, the more closer price action, we need to get obviously above this. But for me, that's a very key line in the sand. We need to get, that's the major like moment of, okay, we've turned this downtrend into an uptrend, and we're back on a bull trend. Because at the moment it's sort of just consolidating, moving sideways, exactly jack, just like a crab market. So we've come, off a downtrend into like a squeeze, I guess, because our lows are getting higher, but our highs aren't really going higher just yet. So it's like higher lows, lower highs, or maybe you could technically class this as a higher high. So it is, I don't know, I think there's enough structure there to start maybe becoming optimistic, right? The thing that kind of killed this run up here, so see how we came from this pivot and we moved up to this level here, this resistance. The fact that we got this pullback that happened over the course of like a month, it was like basically a lot of February and then early March, that's kind of like kept things under control, as far as like the bulls getting too out of control. But here we are, like we're just, I guess the next thing to really pay attention to with crypto and Bitcoin is we just need to know where we're going to maintain support. So are we going to hold... At the moment, we're trying to hold 24.5, so 24,500. There's evidence here, like look at the size of that hammer. Like, at least on the hourly chart, that's... Or dragonfly doji, whatever you want to call that. That to me, that spells buy pressure. So there's demand above 24,000, some type of demand above 24k. Now, is that enough to hold it like indefinitely? Nah, it's you know, we have to see further action or activity up to say that this level has been a good, like, solid area for a bounce. Because look, there's all of this action here. This is called like fair value gap. Like this move here has not been like filled. So we may revisit those prices, which is basically 22,500. You know, dip back through into there before going higher potentially. You know, that's quite possible. However, if we do start picking up and rip above 26 again, like, then it's gonna leave that massive fair value gap behind without filling it. Fair value gap. So that's where Bitcoin stands at the moment. I'm sure the alts have been having a pretty amazing, like, past 12 hours off the back of the CPI figures. We've got a new daily candle now, so we're 11 minutes into the day, the new day. Let's check Bitcoin. Now that's a hell of a wick on the high side. So yeah, impressive that it got to this level, but it sold off. Like, a lot of people took profit on that rip up. But still, yeah, very cool move. We'll see if today, maybe today's going to be a day of retracement. We don't know. We'll just have to see how that pans out. We're only like 10 minutes into it so far, so yeah. Just be careful. You don't want to get trapped going long from here, because there's no hard, rock solid evidence that we're going to hold these levels yet. It could happen, but we need to see some more support. We need to see, like, price. Maybe it's trying to backtest 24 again and then move up higher, or, you know, repeated bashing it back against 24k support might cause the price to break through and go down. So let's play that as it comes, I suppose. But yeah, all in all though, just to recap, awesome result for CPI, coming in as forecast at 6%. No surprises, I suppose. Like, I think a lot of this run up that came from 20k was off the back of the CPI forecast being just 6%, right? So there was this, like, anticipation before the result actually even came out, you know? The market was already moving up. Very cool. The S&P 500 though, off the back of all those banks going collapsing or whatever, all that banking drama, like the Silicon Valley Bank and all that, it's had a rough couple of days leading up to this point. But maybe CPI, the good CPI result is going to be, you know, reason enough for it to at least hold ground or hold support or keep things at least, you know, relatively stable. As long as the DXY doesn't start taking off again as well, like, because we've got to keep our eye on that. That's basically how the US dollar is performing. Wow, Aussie dollar not doing so great in the last month. Pulled back off 72 cents, I think, or not, didn't quite make it to 72, but yeah, damn, it's painful buying US dollars with my money at the moment. It's not as fantastic pulling in. I can only get 67 cents at best. with my dollars. Not the best exchange rate at the moment. So yeah, that's pretty much all I wanted to cover. Just to see like what the market did post CPI. Good positive move up off the 0.4% drop off the previous reading. So very nice. Yeah, let's watch the alts, see if they can do some exciting things. I think they did already. Anything crashing right now? GFT, CKB, AGLD, SNX, INJ, Mask. Not crashing, but pulling back. But yeah, early moments in the day. It's only just beginning, so we'll see how it pans out. All right, guys, I'm gonna wrap this one up. It was just a quick recap, just touching base post CPI, and I'm gonna catch you in a future stream, hopefully soon. PPI, less than 24 hours to go, we get PPI, so maybe that's going to be fuel for another push. We'll see if that comes out the way we want to see it, or whether it causes carnage in the opposite direction. But yeah, let's keep our eyes peeled for that. And then obviously the funds rate is a couple of weeks after that. It's the 23rd of March, so that's next week. Okay, next Thursday we get the funds rate decision. So yeah, exciting times. All right, guys, thanks for tuning in, and I will catch you on the next stream. Have a good night, have a good day, wherever you are. Bye.